Happy Saturday, and I hope you've had a wonderful week and weekend so far. I'm coming to you from outside of Edmonton, about an hour Edmonton, Alberta, Calgary, and it's been beautiful. So pleased to be here, and I'm glad I have this uh, episode with you. So, with that in mind, we did have a short week, so but that doesn't mean things didn't happen. So, as always, I like to briefly go over the economy and markets and a few lessons in emerging markets. Not much trading to report because it's been a pretty busy week, and we'll talk about earnings. So, basically, I think there's the five themes today I really want to pay attention to. Number one, it is an important week. As you know, the Fed is took a break last month, so they are really watching all the data, and we will discuss the employment numbers which came out last Friday. But we do have CPI and PPI coming Wednesday and Thursday. Friday, we have the consumer sentiment. So again, Fed will be watching this, and we got less than 3 weeks to go for the next meeting, see what they have to do. As far as the week, as you know, it was a short week. Monday was a half a day with the markets, and then Tuesday was 4th of July in the United States. And then most people usually what happens, when there's like those 2 days, they just take the whole week off. So there are a lot of people were on break or vacation. What I will, because of that, the relative volume was little low. So things during the day there was some volatility, and taking the news, it went like both ways when there was major news. Um, from the charting point of view, there's a couple of things I want you to pay attention to. It looks like there might be a little divergence. We see if it's a short-term divergence, and would it be possible we could see the double top? Now, one thing is we shall see the charts last week. I mentioned that we had end of the quarter, our first 6 months of window dressing, and generally what happens, the window dressing is done, and usually some people take some profits the following week, and it happened just because it has been such a good first half. The one concern we have is the yields, and we'll look at the charts. What's happened with bonds last week, especially again with the Fed's minutes, and then we had the unemployment numbers, and what is going on with the yields. And as I mentioned, the employment number was a big news last week. The other thing you have to pay attention to is this earnings season starting actually this coming week. A major one will be on Friday. It's starting with the financials, so the big banks especially, and we'll discuss that. Just be aware of it. But just a heads up, there's uh, we got two tails. One is the regional banks, smaller banks, but it looks like the big banks are looking pretty healthy. And I think that was one of our themes in the beginning of the year with this uh, net interest spread. It's been really helping them out, and they have been pretty healthy from financial point of view. And especially if you have a soft landing and you don't have a lot of defaults, that will bode well. But the regional banks are the ones who suffered obviously through March. So, but there's some important um, earnings coming up. We shall see, like from Citibanks to JPM to BlackRock. So be aware of that. So having said that, let's look at under the hood. The numbers, we're looking at the initial jobless claims and continuous comparing to 2019. And obviously I flew this past week, and you can see that, I mean, the airports were packed, flights, most of them were packed. And again, you see when we compare to 2019, we are actually ahead of 2019. It has bode well for the airlines. And we have Delta Airline, by the way, coming up on Thursday with their earnings. And you look at America Airlines, Delta, you look at United, and with the lower fuel price and also the full flights, that has been pretty good for this industry. As far as last week, as I mentioned, there was a few things very important. One was the FOMC minutes. So based on that, we found out that there were few actually members which they're looking at increasing the rates, and they finally voted to stay put. But with this July 26th next Fed meeting, it looks like they are probably, especially the employment numbers that we had, and of course, depending on what the CPI will be, they are ready to go. Now, one thing is not with the unemployment number, it has pushed the chances of having another 0.25% interest increase to 92% for the July. Now, it's interesting that 3 months ago, when we were looking at the Fed Watch, the CME Fed Watch, there was a talk that we actually will have 0.25% of rate reduction in July because of the recession, which we'll talk a little bit. So be aware of that. And then, of course, we had the non-farm payroll, which I will discuss in length as far as, it was interesting that the ADP, the private employment numbers, that came at 497,000, and it shook the markets. That was one of the reasons the market really went down. It was much better than expected, 245,000. But yet, then we had the Bureau of Labor Statistics comes out, and it was way below what the prior numbers were and expectations were, when it comes to the non-farm payrolls, and that was something of a comfort for the market in some ways. But on the other hand, then we saw that there was hourly earnings still, it was 0.4%, which doesn't bode well for the inflation. The expectation was 0.3%, and also the hours worked, it was a little higher. So that shows that the economy is growing in that point of view. So, employments, you can see where we are now compared where we were in 2020. It's the highest we've been. So we had 209,000 again, as far as the employment, which was, as I mentioned, a little below the expectations. But one of the things you have to pay attention to, that prior months employment numbers, they were revised downward. 110,000. So when you take 110 out of 209, really the net gain was 99,000. It's positive, but it has been much slower than what we have seen and we have accustomed to. So basically, that's something that maybe we were looking at the M2, what the supply that the Fed has been putting the brakes on, maybe it's taking its effect. Now, as far as the civilian employment, which is alternative measure of small businesses, they rose 273,000, and that's the reason unemployment actually went to 3.6, 3.7%. Now, we've been in past 12 months, like basically actually 14 months since the Fed started increasing the rates, we've been just floating between 3.4 and 3.7. And the Fed had said, that the goal is, they won't be concerned till the unemployment goes to 5%. Well, it hasn't happened. It's just a very narrow corridor that's been moving. We talked about the hourly earnings. There's something I just thought to bring your attention. There's something that that Labor Department focuses on. It's called PERT model, which is an estimate for the net jobs created because or lost because of beginning or end of new small businesses, and they are not included in the payrolls survey because it's only a sample of existing business. In the past 12 months, that model has accounted for 1.4 million out of 3.8 million. Now, on the surface, it might sound like, oh, wow, this is great. But it is within the historical norm, so nothing really unusual has happened. And also, again, because of COVID, that affected the businesses dramatically. So You have to understand after all that, the total payroll being up 3.8 million the past 12 months is way above what the chart is showing, way above the 2.9 million the need that adjustment basically household survey. So the question is with that this birth drought model in this past month, it only added 26,000 to payroll in June itself, which is well below the average of the past years. And again, what the Fed is looking for at this time, they are either looking for a big slowdown in the labor market or a big drop in inflation. And so far, neither one completely has happened. And that's why paying attention to that CPI is important. Just breaking down the employment number just to show you where it came from, the June jobs. We had the healthcare was about 44,000, 41 or 42,000. Social assistance was about 22 to 23,000 for a total of 65,000. So that was the highest number. And now this is interesting that non-private here, government added 60,000, construction, leisure and hospitality. The big losers come from the retail, trade, and transportation, plus wholesale trade. So what we look forward this this coming week, as I mentioned, the big ones are at 5:30 a.m. Big time is the CPI at 0.3%, and month over month, and 3.1 year over year. But this is the core we want to pay attention to. Then, of course, we have the core PPI and PPI coming up the following day on Thursday. And then on Friday, we will have the University of Michigan. As far as the bonds, you know, this is what concerns us. You see the UK gilt and 10-year. We've had this big move last week, and the inverted curve still, you know, the yield curve is still inverted. It's better than the over 100 basis point it was, but still we are up there, and it's 90 basis point, 88 basis points. So that's still, we'll talk a little bit about the GDP and did we have a recession? Is a recession coming with all that? So so the week we had, basically, as I mentioned, I think it was more profit taking and slow week. The Dow was the biggest ups in the market. They were down almost 2%, NASDAQ almost about 1%, and S&P in middle 1.15%. So as a whole, the markets dropped 1.12%. Interesting part is you see the small cap value and a US mid cap value. They were, although they were down, they were relatively flat down, while the the growth side was hit a little more, and perhaps because of the way the rates acted. Now, when we go to the sentiment, this is as a Wednesday. Now you see the spread between the bulls and bears. Now we are back to 24%. So there is a lot of enthusiasm. So I want to make sure we are aware of that. That's one of the highest we've seen in a long time. You can see this is the 8.4%. This is the highest we have seen. And again, we are a little higher than where we were in June as far as the 14th, as far as the bears go. Fast forward, and then we look at the CNN fear and greed. We're still in that extreme greed as we were last week. We were at 83 last week. One step further, we look at the Citigroup market sentiment. We are not in the panic mode, which is this area, but this is the highest we've been since June of last year. So there's a lot of positiveness. And I would also bring to your attention that this FOMO is affecting a lot of people who have been waiting, and then they look at the first half of the year and they say, oh my God, I missed, let's say, this AI related stories, maybe I should get in. So There is some risk monies coming in, perhaps that's one of them, but also there's tons of money again when you're getting almost 5% in your short-term rates. It's still sitting there, and that's so that the risk off is in one place, risk on is in the market. So there will be that back and forth, but sentiment is pretty bullish in a sense of the feeling. Um, so this is just I decided to put everything under one roof, and this is and the reason I want to do that, I just want to be a common thing, a common theme that in the Dow and S&P and Nasdaq, the Euro stocks, you see Nikkei and Russell. I want to see almost like a double top. Now, I wouldn't put too much value at this moment, but I will pay attention to it because again, this was a short week, so it was a little more of a sentiment and lower volume. Uh, but I want to pay attention to that, and we shall look at the divergence on top of that. But I mean, Euro stocks, you see that's happening. Of course, VIX went outside this Bollinger Band, came back in, and VIX had a big move on Thursday, as I mentioned, mostly because of the ADP numbers appointment. And DAX has been hit hard, and almost like this is almost like a shoulder right here. But there's quite a few double tops, at least visually from classic point of view. So that's one thing. And the other thing is I was looking at the hourly on S&P cash, and we hit the one standard deviation, but we are in the squeeze with the momentum down. So we just on an hourly, again, this is something to pay attention. Is it possible in the short term? Maybe we'll go at least -1 or -2 doji. So anyway, that's from the hourly point of view. I will pay attention to that. But here it is from the looking at a couple of oscillators, indicators that and you see it's almost double top. It's like was a higher high. We see these dojis and inverted hammer. Maybe this we are very healthy, way above the 50-day and 200-day. But what I see is you see the RSI. We have a higher high, but we have a higher low on RSI, and the same thing in MACD. So these are just a cautionary, just be aware of that. We'll see again big numbers coming, and I think people are coming back from vacation, and we'll see how the reaction will be. But that's something just put back of your mind that there is a possibility maybe we'll have a little more profit taking, and we could even go to the support at around 431, and even well, this 50-day moving average will be moving, so maybe that will be a support. Same thing, we can observe it with QQQ in the NASDAQ 100. This is a lower high, it's like a double top again, but look at the divergence on RXI and the MACD. So again, a food for thought. See where is next big support, and in 350 and 345. So just bring to your attention. Now the bonds, you see what has happened. They've got hit hard. This is after the first week, and drops Thursday, and again with unemployment, with the employment number, ADP did a big job. You see that big drop on Thursday and Friday. So basically, that's important to pay attention. And why is that? Is because look at the 10-year yield. We actually hit 4.1. We're at 4.05. And that's the highest we've seen since when we go back towards February, and we very close to that. The highest we've been is like 4.3. So one thing is, all right, we're close to the upper edge, but you see the slope. You're going up. We're above the 20 bar, but we were in the squeeze, and the squeeze has fired the upside. So, and the A wave and C wave, they're all up. Again, be aware of that, because if this rates to continue going up, it won't bode well for the most likely the big NASDAQ companies. So just be aware of that also. So I'm a little cautious at this time. Not that it has triggered a lot, but it's just there's few warning signs here and there. Gold actually, I didn't do the Thursday gold. I just didn't have the opportunity with everything going on, but that would have worked out very nicely on Friday. Every time I mentioned, there's a big Friday news, let's say like NFP, gold does well. I mean, that's a time you can get more than, double the contracts. And if I had 5, I would have done 10 or 15 or even 20. So, but then that, still in a downward upper. Look at what is happening with palladium and platinum. As I mentioned, it's mostly, again, moving away from combustion cars and electric vehicle. There has been a big move down. And again, you can see the double tops, these two in asset classes. And then oil has had their big move. We had OPEC meeting last week. So Saudi is going one way, Russia is going the other way. We've talked a lot about that. So here we are, and that actually helped the energy sector. And the gasoline, which is interesting, we talk about Memorial Day weekend and then July weekend, they had a little nice bounce, but generally this is the movement that you like to see. And so most of the pricing, the summer drive has already been in. I think more of a reflection. And talking about divergence, I usually do this on the stock section, but also I want to bring the Tesla. Last week we talked about Tesla, where what's going on, and it has done magnificently since their earning came. But we gapped up, and here we are, right on the support of weeks ago. But again, you see the RSI divergence and MACD divergence. So again, food for thought. Be aware of big cap stocks, that how they are behaving. Now, expected move, again, we expected that very much. Last 3 weeks, I mentioned we've been outside these expected moves. Last week, we were like with the standard deviation. So this week, you see what we did. We finished lower, but look at that edge of the lower edge of expected move. We parked right there. We were up for the day, and then the last hour, so 2 hours, we just sold off, but we parked right on the expected move. It was about $53 for last week. This week will be about $50. QQQ respected the lower edge, as you can see, and the bonds, the Russell did go outside. Thursday was a big sell-off, but what did we do? We came back and came inside the expected move. Dow was the only one who did go outside this expected move. Correction almost around 2%. Now this is bonds almost 2 standard deviation. It got hit hard, and again because of the numbers and the expectation that the Fed is going to increase. The dollar hit both ends, went to the upper edge, and then came the lower edge on Friday. And again, that was it boded well for obviously crude oil and gold. As far as gold itself, see, we hit the lower edge and then we bounced back and we stayed almost flat. Silver, the same thing, hit the upper edge, came down, and financials had a nice bounce after going down on Thursday. They bounced back, and then energy had a big day on Friday. Again, there was no catalyst except maybe crude oil. So Exxon disappointed, and the disappointing news on Thursday, and then we had a nice bounce. All right, so with emerging markets, got a few things to share with you. This is our looking at all the international ETFs, whether it is the EFA or Australia. You see one of the strongest ones when we look at is India. The trend has been nicely up. This is for the 2 months. We are above the 20 and 50 day, but a lot of choppiness in other markets. A lot of them are below the moving averages. So visually, again, it gives you a better understanding, where the strength is, and really is stronger than, let's say, we have Hong Kong, and Hong Kong is below. So um, it's just a visually. I just wanted, can have the reference added. Um, let's go back to the strength of the economy, whether there's recession. You see, majority of countries, economies after quarter 1, they're in a positive. Germany, it's surprised they went negative, so that has affected their markets. Czech Republic, which is actually public, Poland, they are very much dependent on Germany stance. They're very much connected. It's affected them, and of course, Russia has own problems. Taiwan, and then we have in South America, we have Chile and Peru, and there's a little political there as well. So on the other hand, countries to me, Israel and Saudi Arabia. We see Saudi Arabia, it's busy using their PIF money to buy all the players from Chelsea and everywhere else. So that's where the money is going. In the meantime, talking about as far as happening with the countries, this chain supply diversification has happened in past year away from China. And for a while, I've been talking about Vietnam being the China of Asia. Bangladesh, as you know, it was hit really hard, but it is coming back. So movements have gone to Bangladesh, Vietnam, India, Singapore, and this is for 2022 versus 2021. You see, it's been a nice fund of flow of the funds. Foreign direct investments have come in countries, and China has been they have been the benefactor. China has been the really the victim of this. So they're down 4%. But when we compare 2022 to 2019, average of 2017 2019, which was pre-COVID, they're healthy. You see, Bangladesh and Vietnam, they're still good. Look at Singapore. But China is the strongest, second strongest. So when we compare to where we were before COVID, China is still healthy. When we look at the last 22 versus 21, that's short term. Talk about combustion and electric vehicles. Indonesia, Australia, and New Zealand, they've had this deal going on with EV battery, which could, obviously affect the nickel producer in Indonesia being one of the largest. They have decided, keep it, and are working on keeping the nickel also. They want to have more control than foreign companies. So I thought just share with all of the companies that are in Indonesia, just looking at some of their fundamentals, market cap, the PE, and price to sales. You see the Anika Tambang, and it is better valuation when we look at the price to sales from the PE point of view. But when we go to balance sheet and then you see the total debt, obviously the current ratio of cash would look kind of healthy. That's the difference. So anyway, just a couple of ideas, see what's going on. Going completely different, with the streaming and other things, and India becoming the most populous country in the world, competing with China. It was interesting to see that Disney Plus, Hotstar, used to be the #1 streaming app as of May of 2022. Well, they dropped to #2 as of 2023. Amazon was #3, the Prime Video now they're #5. So completely out of the box. Just something about solar and wind, talk about oil. You see again, the trend, right? So where we were in 2020, 21, 22. So see, there's been a big movements in China and Vietnam, as well as all the other countries. Thailand, it's pretty flat. Pakistan, better. But Taiwan, India, Japan, Vietnam, they're all action. And last but not least, I think last year we talked about some of these countries. They all have their own problems. They have valued currencies. They have internal political problems, and obviously they've had as I mentioned, like Pakistan and Sri Lanka and faulted. But things are coming back. So this is looking forward. Again, we look at the price to book based on the trailing 5-year median. You see Kenya is offering some value, Pakistan, Sri Lanka, and Bangladesh. Nigeria and Egypt and Turkey are pretty expensive, but they're coming to life. So just a food for thought that they're on the radar. Of course, Turkey had a magnificent return last year, but they have their own problems going on. But just these were the aided countries last year. So all right, as far as the lesson of the week, I just talked about the first half of the year. So we wanted to see what happens if the first half is a very good first half, and looking at some of the best since 1975, or well, since 1950 actually. Some of them, what happens in the second half. So generally, most recent years has been positive since 1995, as you can see. But previous to that, especially you can see in 1974, I believe, we had big movement, and then we had a negative, of course, a lot of people profits. 1987, the same thing, and had a big one, and of course, October, October 19th that year, 97, the same thing, but we did have growth. But then 1983 had a 1986 had negative. So just a little food for thought. Now we are here, so we had a really nice first half. Just this is more of a just see how the markets. I would look at this. I mean, it looks random to me, but anyway, you have to put the economic situation as well. What is happening as far as, for instance, this was the the third year of presidency. I would relate it to more like something like this. 1975 was the year before election. 1987 was the year before election. 1983 was the year before election. 1995 also was the year before election. So 2019 was the year before election. So and 2023 is the year before the. Anyway, it's just a review. Seasonality. We want to look at so far as far as the years. What are the best days? As you know, for many years, I've recommended if you want to do trading, the best trading days are Tuesday, Wednesday, Thursday. Kind of quiet on Monday because of the weekend effect, and then Friday there's a lot of rebalancing. So, and this is the statistic for that. So you see, Tuesdays are by far the best producing day, and then Thursday is the same. Out of the box, we talked about supercomputers and other things. Now, this is a quantum computer which can calculate things that take rivals 47 years. I thought it's happening in the world of computing. We talked about the non-farm payroll. So we've been on a roll. We've had 14 reports, and every one of them they beat the reports or the expectations. This week was this last Friday was the first time we missed it. So although small, but that shows where we were in the previous ones. We've been in a huge hot. Talked about the recession. Now there's been all this debate, even though BLS has not, and it has not been confirmed. We did have 2 quarters of negative GDP, and generally that means recession, although that's a simplified way. It has not been confirmed. So again, we talk about the recession is coming up. Not we're looking at it actually for the year about 2% GDP. I've said it, mentioned it before. I think we have been in a segmented recession. Some perhaps in the manufacturing side, we've already had recession. On the other hand, in technology and other things, we've had the growth. So basically, who knows? I mean, the market right now is looking at a soft landing, and that's the reason I think money has been coming in. But this is where we have been last few quarters. Trade, there was no trade, but I just thought to show you the 5 minutes. This is a cash market. As you can see, we in the Dow, we gapped down and then we filled it, and then we went down below where we started. The Nasdaq was pretty flat when we started. It almost looked like a head and shoulder. This one with a up, and the S&P gap down a little bit, and then we filled the gap. But we end up, we finished lower than where previous days closed. So basically, we were down the Friday based on again NFP numbers. Speaking of that, I went to the first 15 minutes. You can see the range of the NFP. Stayed within. We broke through it. That's 12 p.m. East Coast time. So at 9 p.m., beautiful run. You know, we go from 44 to 75. That's a nice run. And what did we do? We just turn around and hold it. And then the profit taking had started right about 11:45 or so, right before, 10:45 or so, and then just waterfall, and where we go, we went right around the low of where the non-farm payroll come out. ETF of the week, I mentioned about oil and energy sector. Well, XES was the outperformer with 6.1%. Especially the shares of Transocean was of 18.5%, and Noble was an 8. The rates really affecting the mortgage rates came at low, they were down 4.3%. The other ETF did well was the self-driving EV and tech. The iDrive was up 5.6%, while the currency hedged MSCI ETH of the HIFA 2.9%. Talk of the week, I'm going back to the seasonality. I'm in Canada. I thought to share with you a Canadian company. It's called Waste Connections Inc., WCN. And based on going from July 5th to September 20th, you see there's been only one losing year, and that was 2019. Every year besides that has been positive, even in 2019 and 2008. So just a food for thought. This is a weekly chart of this stock. We have really been consolidating, and you see just moving averages on a weekly basis. But you can see here it is from the July, and it goes to September. That's for 2021 and 2022, right around here. You see a beautiful move up. So just the idea, they're up about 4.7%, but look how closely they are to their moving averages, just pretty flat. So it tells you, it was a good that could be a good support area. So again, the Canadian company. The other thing is going back to seasonality. We want, NVIDIA obviously is really hot here, and so wanted to share with you. This is for the past 10 years. From you see April and December are usually their weak months. Yet July and August are strong months. So just letting you know, and you can see again, Tuesday is their best day. Scan of the week, I just decided with the largest ones, the S&P 100. We got quite a few stocks in the squeeze. Be aware Pepsi is going to have their own earnings coming up. So just be aware. Always watch, when you watching squeezes, watch for the dividend payments and the earnings. Last but not least, as I mentioned, this is the earnings time. Be aware that Delta Airline and then Pepsi, they will be reporting before the market opens on Thursday. Friday is a big day. We have the BlackRock, we have the Citigroup, we have JP Morgan, Wells Fargo, all the financials. Of course, we have Ericsson and United Health. So with that in mind, I hope that was useful and helpful. And what I'll do is I'll stop the recording and open up for any questions and answers.